bye, 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 bye.
I know I'm a grifter, strong man. You could lick your hand and smack me in the nutsack. Thank God for Tesla Maesla and you, strong man.
All right, everybody. Welcome back to Strong Man Personal Finance. I'm going to have my moment of gloating and glory. Because remember when Alibaba stock went down? All you clowns in Fabio's Discord? I saw all your comments. Oh, Strong Man, he's a bad investor. He's a CPA. He doesn't know how to invest, bro. Because his stock went down, bro. He's so stupid, bro. But I hear all you clowns in the Discord. You're all bullish on Meta, bro. It's the future, bro. Meta, bro. Let's go check Meta. See what happened. Oh, wait a minute. Oh, it's wonderful. But all jokes aside, I want this to be a lesson to all you. And we're going to go through Meta's earnings. Don't go away. We're going to look at their earnings, okay? Let this be a lesson to everybody. Just because a stunk goes down, it doesn't change your fundamental thesis. If you have a thesis and it doesn't change, regardless of short-term price fluctuation, there's no need to talk trash, everybody, okay? That's how it freaking works. Stonks will go anywhere in the short run. But if you believe in Meta and you've done your calculations and you believe a lot of the FUD is BS and the stock went down 25% today, who freaking cares? Because investing is about the long run, okay? If a stock goes up, doesn't mean you're a genius. If a stock goes down, doesn't mean you're an idiot, okay? Let this be a lesson to all you clowns. Anyway, I'm really not laughing at you, but it's kind of, it was perfect timing. You know, the Baba hate, the Baba FUD. The Baba's up like 8% today. I'm so smart, bro. So let's go ahead. Let me make sure I'm sharing my screen. Let's go ahead and look at Meta Majeda's earnings. Okay. What is Meta? Well, I don't know if you've heard of Facebook, but it's got Facebook, it's got Insta, and apparently now we have the metaverse, bro. So I don't care about the commentary, blah, blah, blah. Let's look at the freaking revenue. So revenue by Avenue is up or down 4% year over year. Honestly, is that a shock to anybody? We're changing the economy's changing, okay? Or the economic environment is changing. We had the little stimmy bubble. Everything was going great. It's the future, bro. Then we had inflation. The Reserve raises interest rates to calm it down because they want inflation to go down to 2%. That's their goal. It's like what, 8% or something like that. And now that we have inflation, economic and interest rates going up, economic activity is going to slow down because you can't finance as much stuff. People are willing to spend less because interest rates are higher, okay? And that has an effect on ad rates. And it's obvious. If you're a YouTube content creator, you know your ads have gone down, okay? Partially because I suck as a YouTuber or my channel's collapsed, apparently. My ads have gone from an average of over $1,000 a month. 1 month I made $2,000 on freaking YouTube to about $500 a month. Okay, that's a pretty big collapse. Part of it's because of my viewership leaving, for Snot and whoever. And part of it is because of the adpocalypse. Okay, we're in a recession technically, right? So I'm not surprised to see ad revenue fall 4%. I don't think that's the problem. I don't think that's what people are worried about. I mean, obviously, okay? What is scaring the crap out of people is this whole freaking metaverse thing. And we're going to go dive into the expenses. And you're going to see how absolutely brutal it is to Facebook's bottom line. So while revenue has gone down 4% year over year, expenses, costs and expenses, they don't break it down by gross profit or whatever, has gone up by 19%. So Facebook's gross profit has fallen from, operating profit has fallen from 36%, which is a very, very profitable company, down to 20%. That is a massive collapse. What, 36, 37% to 20%? That's freaking huge. Absolutely enormous. This whole metaverse thing, I can't believe how much money they're spending. Like, does it really cost that much money to do this crap? Really? You can't like rein that in a little bit? Whatever. Especially during times like these when ad rates are going down and you have competition. And apparently, so I didn't even look at what happened to Apple, but apparently Apple did something that's going to affect Facebook's revenues as well. There's a lot going on, okay? So let's go ahead and look at the net income. So their bottom line profit was obviously less than was 15%. Okay, and if we look at Meta's historical profits, that's absolute hot trash. Let's go. Annual profit margin in the past 33, 33, 26, 39, 39, 36, 20. So I guess as a note of reassurance, Facebook has gone through time periods where their profit margin has been less than those higher margins of 36, 37, 38. But even then, they haven't sunk as low as 15%. And we can go look at the quarterlies. Let's see. Yeah, their profit margin's on a steady decline. It went from 40%. Oh my God. It's gone from 40% all the way down to 15%. That is nothing short of an absolute collapse in profit margin. Okay. And it's probably because of this metaverse crap. So let's keep looking. Now, the important stuff. Family daily active people. I don't know what that means. Family monthly active people. Here we go. This makes more sense to me. Facebook daily active users. Daily active users were 1.98 billion, an increase of 3% year over year. So for a website that's dead, at least they have growth in users. But the question is, how much revenue are they making per user? Facebook monthly active users, an increase of 2% year over year. Ad impressions and price per ad. In the third quarter of 2022, ad impressions delivered across our family of apps increased by 17%, and the average price per ad decreased by 18%. So it looks like they've grown their users a little bit, people that are actually active on the platforms, on Facebook at least, and they've generated more ad impressions, so people are seeing more ads. But the problem is the price per ad is going down a little bit faster, okay? And it makes absolute sense. Now, here's where the problem is. Well, it's two things. It's costs and expenditures, which are just destroying profitability, and capital expenditures, which are destroying free cash flow. Costs and expenses. Total costs and expenses were $22.05 billion, an increase of 19%. This includes an impairment loss. Sometimes you have to write stuff down of $413 million. Now, that's not significant enough. There's deeper problems in that impairment loss. That is not a big percentage of their expenses, okay? Capital expenditures. Capital expenditures, including principal payments on finance leases, were $9.52 billion for the third quarter of 2022. Now, I want to compare that to their capital expenditures for prior quarters. How do you do that? You go to the statement of cash flows in the investing section. So we can see, this is quarterly, so every freaking quarter, we can see right here, capital expenditures, $4 billion, 4.2, 4.6, 4.3, 5.3, 5.3, 7.5, and now we're at 9.5. What do you think that's doing to their free cash flow? That's absolutely exterminating it, okay? So you have a twofold, you have revenue declining, you have expenses on the accrual basis of accounting going up, profits are massively decreasing, and capital expenditures are increasing. It's probably all because of the freaking metaverse, okay? Or at least mostly. Let's see. We repurchased 6.55 billion of our Class A common stock. We have 17.78 billion available. So let's see how many shares they could buy back if they just bought it all back. And I don't know how much money they have on their balance sheet. I didn't see a balance sheet on here. 780, 000, 000. Divided by, what is the share price? 105. But they could theoretically buy back 170 million shares. And if we go look at their most recent shares outstanding, because I don't know if they say that here. Let's see. How many shares do they have outstanding? Shares outstanding. So they could theoretically buy back 6% of their shares. If they took all the cash they had set aside and bought back all their shares right now, they could buy back 6% of the shares. And the lower the stock price goes, theoretically, obviously, the more impact that it has, the more shares you can buy back. And if they're buying back cheaper shares that are undervalued, theoretically, then it's a good deal. Okay. But if they're burning this much cash with capital expenditures, I don't know. Should they maybe hold on to their cash to weather the storm? Let's look at how much cash do they have on their balance sheet. Okay. So, they have 17 that they can buy back. Well, they're obviously not going to buy. I haven't seen their most recent balance sheet, but I guess if they liquidated all their short-term investments and converted that into cash, they could theoretically buy all the shares back. I don't know. They're obviously not going to freaking do that. Okay. But I guess that's one positive notice. The cheaper the stock, the more shares they can buy back, and the more you can own the company if they do that. Let's see. Long-term debt was $9.9 billion. So how does that change? Let's see. Are they packing on debt, bro? Total long-term debt, $21 billion here. Long-term debt. Okay, this might be inaccurate. That's odd. Okay, unless they paid off a ton of debt in this most recent quarter. I haven't been tracking Facebook that well, but here it's saying they have 21 billion. I don't know if that's like maybe they're mixing in a bunch of stuff that we can't see here, like leases, but I guess their debt overall doesn't seem to be that bad. Okay, outlook. We expect fourth quarter 2022 total revenue to be in the range of 30 to 32 billion. Now you may go look and say, well, that's some growth, bro, right? Because look at the revenue in the most recent quarter, 28. And then in this quarter, it went down a little bit, but they're going to increase, right? So they went from 28 to 27, but now it's going to go up to 30. Well, duh, it's the freaking holiday season, okay? But if you compare it year over year, what is a projected decline in revenue? Let's go back. So worst case, their revenue declines 30 minus 33.67 divided by 33.67. So did I do that math right? Their revenue year over year for the fourth quarter, at worst case, could decline by 10%. Let me double check that math. 30 minus 33.67 divided by 33.67. Yeah, they could potentially, worst case, have revenue decline 10% year over year for the holiday season. That's pretty significant. Okay. Our guidance assumes foreign currency will be an approximately 7% headwind to year over year total revenue growth. So basically, the dollar is super strong. And if you have earnings in other currencies that have massively declined in value relative to the dollar, when you convert those currencies to US dollars, you get fewer dollars because the dollar is stronger. So international companies that have earnings across the world are getting absolutely freaking hammered. So the strong dollar, bro, isn't always a good thing. Okay. Unless you want to go on vacation to Europe, which I'm considering, but I have 2 kids. Okay. We have increased scrutiny on all areas of operating expenses, but they've gone up. These moves follow a substantial investment cycle, so they will take time to play out in terms of overall expense trajectory. Some steps, blah, 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 blah. Okay. We expect 2022 total expenses to be in the range of 85 to 87 million. Updated, so they've slightly reduced the maximum expenses they could have. Let's look at how this is laid out. I don't know if I can figure out the total expenses. Let's see. Well, I guess total expenses, if they're including total expenses. Let's see. We'll do the year. Total expenses. 117,929 minus, I guess I'll just subtract net income. That's all the expenses. So their total expenses, if this is even accurate, were 78.5 million in 2021. And if this is even remotely accurate, their expenses have increased by 8%. So, I mean, obviously their expenses are going up. Let's see. We expect a slight majority of our 2023 expense dollar to be driven by operating expenses, with the remaining growth coming from cost of revenue. Blah, 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 blah. Now, here's where the stinker is. Reality Lab expenses are included in our total expense guidance. We do anticipate that Reality Labs operating losses will grow significantly. Blah, 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 blah. Did they say how much? Where? Whatever. We expect 2022 capital expenditures, including principal payments, to be in the range of $32 to $33 billion. Okay, so they're starting to tighten in their shot group. If we go back and look at capital expenditures for 2021, let's see. Is that double? Did they double their capital expenditures? Oh my Lord. At least according to this, their capital expenditures in 2021 were $18 billion. And now they're saying they're going to be 30. So they basically doubled their capital expenditures. And then for 2023, they're saying their capital expenditures are going even higher. Oh my freaking Lord. Okay. Absent any changes to U.S. tax law, we expect our fourth quarter 2022 and full year 2023 tax rate. Well, we'll see what happens with that. We're talking about, let's raise tax rates 28%. So overall, I mean, we all know what's happening, okay? Massive profit decline, massive free cash flow decline, all mostly because of freaking metaverse crap, okay? I thought I saw how much they were spending on here. Where was it? They had we had like a $9 billion loss or something like that. But yeah, I mean, at the end of the day, how it's going to play out, we know ads are going to come back at some point. Okay, the recession's not going to last forever. There's still billions of people using Facebook. There's more ad impressions. Okay, but it's the ad price per ad that's gone down. Facebook itself is not dead. Okay, they have growth and they have access to billions of people. Okay, this isn't just a clown company, obviously, and they have the potential to be massively profitable. The whole question is all this money they're burning on metaverse, is it worth it? I don't know. Maybe it will. Maybe it won't. I personally don't get it. I mean, it seems to me it's just like, I can put on a headset and I can see somebody on an avatar. I can freaking Skype them. Like, why do I have to go in the metaverse to communicate with somebody? I don't know. I don't understand it. So overall, I mean, personally, I'm not buying this. I'm not saying it's potentially a bad value at this point. I don't know. I haven't done nearly enough research. I haven't researched the effects of, whatever changes Apple did to their terms of service. I haven't really looked into competitive pressures of TikTok. I don't freaking know. And I'm not touching this company, but there's always potential. Maybe the metaverse works out, or even better, maybe they just dump the whole thing. Okay. Because they're losing lots of money, at least relative to prior quarters. So, ouch. Is anybody surprised though? I mean, we all knew they were spending on the metaverse, but when it comes to like earnings, you don't freaking know, man. I mean, you could beat on earnings and your freaking stock could collapse. Let's see. Jeremy buying heavy when Meta was 180. Meta below 200. Meta below. Even in profitable companies, Jeremy can't win. Jeremy should be down big on Meta. Doesn't matter. He'll get more ad revenue. Generational wealth will be made buying one-day calls. I should have bought calls on Baba, man. Every time Baba tanks, I'm like, you know what? Maybe I'll buy some calls. And then I'm like, I'm too much of a pussy and I don't do it. And then every time it goes up. But the one time that I buy calls after Baba tanks, I'll lose all my money. Guaranteed. It's destroyed. Now, I mean, you can't really bully people that are invested in Meta. As long as they have a rational thesis and nothing has changed. Okay, maybe they believe the metaverse will work out, or maybe they believe Facebook or Meta will drop the freaking investments in the metaverse. And if that's the case, their profit will probably skyrocket. Okay, you can't hammer somebody because the stock went down. The question is, why did they buy the stock? Short-term fluctuations don't freaking matter. People still don't know the difference between stock price and company. Tesla went up, so buy. Baba down, sell. Trust me, I've observed that on YouTube, okay? I've taken careful note of that. And now Meta's going to be trash. Even though they had user growth and they had more impressions for their ads. Oh, it's dead, bro. It's like MySpace, bro. Now, if there was a real competitor, and honestly, I don't really see how TikTok is a massive competitor for Facebook. I mean, I get it. People are like looking on TikTok more. But I mean, at least to me, Facebook is like a place where I can message people and upload pictures and just kind of like track people that I knew in the past. TikTok's this clownish freaking app where I'm dancing. I think TikTok is stupid. I can't stand TikTok. It probably helped my channel grow if I used it, but it's so dumb I can't get on there. I want Alibaba to get nationalized by the Chinese. Me too. Me too. I'm down big on Google and Meta, but I'm up on Baba and JD. Chinese stocks are they went up today. Baba went up. I'm a genius. Let's see. Out of all big tech, I think Microsoft is king investment. Well, here's my worry, guy. I've said this multiple times. Okay, a lot of the gains in the last 10 years in the U.S. stock market have come from like the top 5 stocks: Apple, Amazon, Microsoft, Facebook, blah 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 blah. And any stock can fall like Meta. Meta has collapsed. Wasn't it like $300 something, and now it's collapsed 66%? That could happen to any one of those companies. And if that happens, and that happens to 2 or 3 or 4 of them, U.S. stocks might not do so well in the next couple of years. I'm just saying. Okay. Google is 17 PE. Well, we'll see. I have it in VT. Meta spend too much. Pandemic, they have to adapt to new reality. They need to drop the metaverse crap. I don't know. I don't get it. I don't. And like, do they really need? I think I saw $9 billion. Like, what are they spending on? Like, it's insane. Let's see. Everybody's focused on the fact that they burn lots of cash, but nobody looks at the fact that Instagram Reels is pretty successful at countering TikTok. Yeah, Instagram kind of gives me the same vibe as TikTok. Like, I have an Instagram, but I don't really like it. Like, I went on there and it's like all the girls showing their boobs. Oh, I'm so hot, yeah. And then it's all these stupid people dancing. Like, oh. But I don't think Facebook's dead. I think people use it for a different reason, obviously. Let's see. I'm convinced Meta went down because Jeremy bought it. That's entirely possible. That is entirely possible. Everything he touches gets destroyed, except Tesla. He's a genius. Let's see. Any insightful comments? Tattooed Chef. Manish Prabhai called it an easy double at 150. It could be. I don't know. Okay, I'm just saying it's too soon to tell. You got to give these things time. You can't just like, oh, it went down. It's bad. It went down. TikTok is not a competitor, let's be fair. I think YouTube is a big competitor, though. Even then, like, they don't really. I mean, like, there's like videos on Facebook, but on actual Facebook, but I don't think they are a challenge to YouTube. And then YouTube is more of a streaming platform or a video platform, whereas Facebook is like, you go on there to communicate with your friends and upload pictures. At least that's what I do. Totally different. Did you buy more Baba? It's my fellow Baba shill. I did not. I'm actually sticking to index funds for the time being. I had way more cash last year. I've told people this. I had way more cash last year. So like I had maxed my tax advantage accounts and then I had money left over. So I was dumping into Baba. But now my expenses are a little bit tighter with kids. So I personally have not bought any more Baba, but I don't blame people for buying more. What's up? We need to show the VT shill some support. That's right. Give me the likes, baby. Give me the likes. That 9.2 was dead issuance in Q3. Look at I need to see the balance sheet. Like there wasn't a balance sheet on there. At least if there was, I completely freaking missed it. So, all right. So either, there's bears and there's bulls, and we'll see who's right. I don't think Facebook is dead. Obviously, it's not dead. I don't think TikTok is just going to conquer all of Facebook. I think Instagram is a great competitor. I haven't looked at all the details, but to say that TikTok is just going to destroy Facebook, I just don't see it. It's just such a different platform, in my opinion. If you're a clown, you go on TikTok. If you're a distinguished adult, you go on Facebook. Okay? And guess what? Most of the world is older people. We have an aging society around the world, except for Africa and the Middle East. Let's see. Oh, no. Guess I'm still left shilling Baba. No, I'm still shilling it, okay? I'm with you. We have our arms interlocked. Baba shills forever. Let's see. Meta down, Baba down, but Tractor Supply. Bro, Baba went up. Baba went up today. Never forget. Meta went down and Baba went up. I am a genius. Let's see. TikTok is stealing customers from Instagram. TikTok is the new cool, and Gen Z are leaving Instagram for TikTok. Yeah, but I see stable users on Facebook itself, and I see more ad impressions. It's just they're collecting less ad revenue from each impression. It doesn't seem all doom and gloom to me. It's the freaking metaverse, obviously. That's the problem with Facebook. All right, that's it. I got a couple more videos, and I'll be out for the night. And we'll do a Lufufu outro because why not?
Oh, merry stock market. Oh, man. Woo!